I believe by now some of you are already familiar with this particular strategy. Okay, and if you've been following this strategy, if you've used this particular strategy exactly how I taught it in my previous videos, you would have been making some profits from this market. If you look at today's date, today is 11, the time is 11:50 p.m. okay, and today is Monday, November 11. Okay, and if you look at our trade history right here, you find out that it's the same date, November 11, so it's 11:11. All right, so these are all today's trade, and um I've made some profit. Okay, we've made some profit of $378. And remember guys, I told you guys that if we are trading, that we're going to incorporate the habit of making consistent withdrawal from the market. Okay, so for trade, we make profit, we make withdrawal from the market. So that's what we're going to be doing consistently. So since we've made money from today's trade, there's no point saving the money in the account. I can just as well save the money in my bank or save the money in a crypto wallet. Okay, so what this helps you do is that it sort of resets your psychology, sort of resets um everything about your trading. Okay, because sometimes when you find out that you have large sum of capital lying around in your account, you tend to take unnecessary risk. You tend to take some trade that you're not supposed to take because you feel that, okay, fine, I have the leverage, I have the capital, I can just as well take this trade even if it does not go in my favor. At least I still have some other money left. Okay, so but this is not the practice that you should be doing as a professional trader or as someone who wants to find consistency in the market. So I'll counsel you as a trader just like you who have been trading the market for many years, many years right now. I'll counsel you to always make sure you make withdrawal. So guys, let me just quickly make withdrawal from this account. So I just made the withdrawal. Okay, I made a profit of $378 and I made a withdrawal of $400. So and currently I have a balance of $200, and with this $200 I can use it to trade tomorrow. Okay, I use it to trade tomorrow. Okay, so guys, like I said, it's very important. Once in a while you need to make withdrawals. It sort of resets your psychology. When you are trading in the financial market, if you have a small capital, I'll advise you not to over risk or over trade. Okay, you don't have to over risk, you don't have to over trade. If you look at the time in this particular trade, you can see it was 12 a.m. It was 12. The year was even 11:06 p.m. a.m. Here was 12:36 a.m. Okay, and here was 11. Okay, so these were different trades that I took, and I took most of this trade in the morning, which was during the London session. Okay, so and since I made profits trading in the London session, I did not see any need for me to start trading the New York session. So that's just the difference. So if you make profits from the London session, then fine. You don't have to trade the New York session. You can just as well wait for the next trading day, secure your profit that you've made, and wait for the next trading day for you to look for another trading opportunity in the market for you can now start trading the market. So if we go back to our chart, like I said, if you've seen, I still have some trade running here. So like I said, if you've seen some of my previous videos, you would have understood the concept I will use in this particular trading. Okay, so it's just this very good indicator that tends to give you very good signals. Okay, and also it will also help you when you go to higher time frames, such as the 4 hours time frame, 4 hour time frame, the H1 time frame, H1 time frame, which is 1 hour time frame. Then you now go to the 15-minute time frame and also the 5-minute time frame, and lastly the 1 minute time frame. Okay, so if you can follow this principle, the 4 hours time frame, 4 hours time frame, the 1 hour time frame, the 15-minute time frame, the 5-minute time frame, the 1 hour time frame, it's just sort of like a top-down analysis. You're just looking at all the criteria, all the language, all the footprints, the market, all the fingerprint the market is displaying to you. You are joining all of them, and you're trying to come out with the bias. You are trying to come out with the directional bias. Okay, but I know there are more advanced way for you to determine a directional bias. Okay, so well, in a very very simple way. You can just do it using the daily time frame, the 4 hours time frame, the 1 hour, the 15 minute, the 5 minutes, and the 1 minute. The reason why I did not mention the 30-minute time frame is because it's not actually really necessary. Okay, I don't actually really pay attention to that particular time frame. Okay, but you can just use this once. All right, this 5 particular time frame here, you can use it to analyze and figure out where the market is going to, the trend of the market, where the market intends to go to, and you as well follow that particular trend. Now, if you're going to use this indicator that we have here, if you're going to use this indicators that we have in the chart, which is the MACD and moving average and all of the likes, if you're going to use this indicator to trade, you you're still going to have to look at the daily time frame. You're still going to have to try and know the direction the market is going to. So when you're now trading alongside the trend of the market, you will make good profit. So when you're trading in the direction of the market, maybe the market is going upwards, you're now trading and you're looking at this indicator and you're looking out for up movements from the indicator. Okay, so when you look for that, when you catch such kind of trades, it gives you a high probability because you are trading alongside the trend of the market. And the trend of the market, the trend is your friend, so you have to find a way to stick to the trend. When you stick to the trend, you're going to reap and you're going to make money from following or trading alongside the trend of the market. If you were that, if for instance now in this particular zone right here, you looked for a buy position or a buy trade and you got to this particular zone here, you got to this zone whereby it retraced, can you see that the movement from here, in as much as the market bought, there was a movement from the bottom right here to this top right here, in as much as there was a movement right there, it still was not a significant move because the significant move was a sell move. In as much as the market bought from this level, it is not a significant move because it is not in alignment or it is not going to the direction of the market. But when you trade in the direction of the market, you're gonna be able to catch very very good trades such as 100 pips, 50 pips, 60 pips. Okay, but if you are counter trading, if you are trading counter trend, you're not going to be getting very very good trades. So if you want to focus on having very very good trades, high probability trades, you should always trade alongside the trend of the market. Okay, if you want to take your trading to the next level, like you want to really learn how to trade the market properly, okay, you can get our forex trading blueprint. Okay, so with our forex trading blueprint, you will understand how to trade the market properly and profitably. Some of you already understand how to trade the market, but you don't just have some knowledge, or maybe you don't have a structured knowledge. Let me quickly show you how to set up your chart and how to add this indicator in your chart for those of you who don't know how to do that. So you go to your indicators windows. So these are the 3 indicators we're going to be using in this particular strategy. Okay, the first indicator is the MACD, moving average, Bollinger Band. So these three indicators those are going to be using. So for the first indicator, which is the MACD, you're going to open your MACD, you're going to look for your MACD. When you find your MACD, your parameters is going to be fast EMA 12, slow EMA 26, MACD SMA 9, apply to close. The main is 2 pixel, signal is 2 pixel also, then color blue, color black. Alright, so when you have all of that set up on your chart, you click on save, then you're going to have it on your chart. Then the second indicator you're going to be using is the moving average. Okay, in your moving average, your period is going to be period 2, shift is 0, method is exponential, apply to close. In your styles, you're going to use 3 pixel. Okay, use color blue, then you leave your levels and your time frame to all. Okay, so once you have all of this figured out, you click on save and you're going to reflect on your chart. Then the final and the last indicator you're going to be using in your chart is the Bollinger Band. So with your Bollinger Band, the period is 201, your deviation is 1.50, shift is 0, first indicator data, you're going to apply to first indicator data. Then in your style, use 4 pixel, use color orange or yellow or any color of your choice. Then once you have all of this figured out, you click on save. okay, and it's going to reflect on your chart. So you're going to have this particular chart on your screen, and with this particular indicator, the concept using this particular indicator is that this zone right here is where you sell, this zone right here is where you buy, and this middle zone right here is where you take your first take profit. So basically this middle zone is your first take profit zone. So if you're selling from the top right here, this middle zone is going to be your take profit zone. Then at the bottom here is going to be your final take profit zone. Okay, so but in some cases whereby the market is going to very the market is trending, the market is in a trending condition, you're gonna see this kind of down movement. All right, so but basically we bought this market when the market started, we sold this market when the market was on this top line in the Bollinger Band. Okay, and we've been holding this trade because this trade is a bearish trade, so it has been selling very well. So guys, this is just how you're going to use this indicator, and make sure you watch my other videos because I've explained how to use this particular indicator. Okay, make sure you like this video, make sure you subscribe, and let me know if you learned something from this video. If you don't understand anything, let me know in the comment section so I can reply to you guys and assist you guys.